Well, I didn't want to end it, and it's really not the end, but I am taking a break from MicroStrategy, and it's because I had to close my account because of a little dispute that I'm having with Schwab. So I want you to be careful about how they treat you at your brokerage firm. I'm not just saying Schwab is the one that doesn't treat their customers the way they should, but you should look into it. Check your commissions. Check how much you're paying for options executions. Check what they're doing with your order flow. I'll be doing a video on this later because I think everybody needs to know this. Are they selling your order flow? Are they front running your order flow? Are they charging you big commissions? And the big one for me is when you have cash sitting in an account, usually most brokerage firms let you check a box and it automatically gets swept into a money market fund so you can make 5%. Schwab does not have that. Their money market fund is you have to do a manual buy of it. And it pays 5%, but you have to remember that when you have cash, you have to do a manual buy. Otherwise, it sits in cash, okay, and it makes like 0.0045% or some ridiculously low number. So they're putting that money in their bank, I believe, and they're making the float on it, and they're taking advantage of us as customers. So anyway, I'm not going to badmouth them. I think they're a good firm, but I think you need to check with them. And if your firm's not treating you well, there are alternatives out there. Now, let's get to the real story here. MicroStrategy, it's a trade that I opened up November 20th, 2024. Today is June 7th, and because I've closed the account, I've had to kind of close this trade out a little bit prematurely. But at the end of the day, it worked out pretty well. Now, let me walk you through really quickly, if you haven't had time to watch the 50 plus videos on MicroStrategy that I did that are in the playlist starting on November 20th, that's cool. I could save you the time, or if you want to learn the whole life cycle of the trade and how I was mostly in the money, and I'll show you the results right now. So let me show you in the beginning. It's broken down into two sections. The base position, which is essentially the replacement for the stock using synthetics, and the non-base positions. Those are what I sell against the stock, and I make income from it. Now, the income in this case saved my bacon because MicroStrategy, when I first got into it, I think it was about 477. It went all the way up to 543, I believe, and then it crashed down to like 220. So the stock came down about 40%. But because I was in the money and because I was collecting the juice, the income from the extrinsic value, I was able to hang in this position all the time that it was down, and now it's coming back up. And I'm still in good shape. Now I wanted to get to this point where I could just collect the juice, but the universe had other plans for me. And so I'm closing this account, and because I did, I had to end this trade. But let's start with the base position. So I started it here November 20th. I started with 5 contracts, and because my trading plan says there are times when you add contracts, like when the stock comes down a certain amount, you add a little bit, take advantage of some of this volatility that's out there. And I eventually got the position up to 13 contracts. You can see at the end it was 13 contracts, okay? So you could see I started it with about $177,000 invested, and then as it went down, I added some contracts. So I think at the most I ended up investing about, and it's hard to gauge obviously, right? But about $250,000 on this one, okay? So just have that number in your mind, 250, as we go along with this. I netted all the buys and all of the sales out here, and then this is what I lost on the base position after I went in and went out. And you just say, okay, look, you're going to lose some money when the stock goes down. That's the way stock market goes. But here's what saved my bacon. It's the non-base positions, okay? All these trades that I did, I sold calls against my base positions, my synthetics. And I made, like, just on that first trade, which was only a couple of days, I made $71,000 on that because I was so far in the money, and then the stock came down. Now, I say I made, but I'm making money on the juice, guys. You got to strip out the intrinsic value and the extrinsic value. The intrinsic value is the in the money amount. I can't do anything about that. The stock goes up and down. What I can do something about is how much juice I collect and where I collect it. And so I was so far deep in the money. You see, I got $104 for this contract, and it actually came down below the price where I was my strike price, right? And so that's why I made so much money on this first trade, because I believe that you have to be deep in the money until you start to get green, right? And that helps you create the mindset that, like, look, I'm building up a cushion. Anyway, I'm not going to belabor all the trades. You can just see that this is where I started. And then what I do is I bunch them up together. So all these greed trades are together. I sold to open, and then I bought to cover. And then I sold to open. I did a couple of puts in here. But the bottom line is you can see these trades. And if you want to stop the screen and analyze them, you can. Or you can watch the whole MicroStrategy playlist from November 20th. But, you know, that's a lot of bald guy to watch. But anyway, so you can see at the end of this, when I bunch a trade together, you know, I sold some calls, I bought them back, I got a profit or a loss on the position, and I net those out. Okay, that includes the juice in there, right? It also includes my buyback number. It's just the raw number, guys. So at the end, I sum all of this up, right? I sum all of this up, and I put it here in my non-base position category. So here's the base position. I lost $84,000 on the base position, but I made $124,000 on the non-base position. Most of that comes from the juice. Some of it comes from the in-the-money amount when it went down. If you've been trading in calls for a while, you know what I'm talking about. And that's one of the reasons I like to be in the money so much, especially when a stock is on its way down, like MicroStrategy was. And all the way down, I had all these experts telling me that I was crazy because MicroStrategy was going to go to a gazillion and I was going to leave all this money on the table. And, you know, that's what you do with covered calls, right? With a covered call trade, you're collecting the juice. You're collecting the income. You don't care, kinda, that it goes up or down. You know that stocks are going to go up or down. If you don't know that, you shouldn't be in the stock market, right? But you try to pick the trend. Like I saw the trend coming, I think, did a pretty decent job of anticipating the trend, and I was in the money when the stock was going down. And then when the stock was going up, I was still in the money a lot, but I was trying to get out of the money, right? I gave up some in the whipsaw in there and rolled up a little bit too much and too little and did some mistakes, but that's what trading is all about. Like you're never going to nail 100% of them. Anyway, so here's the summary of all the last 6.5 months. I made $124,000 on the base position, gross. And then when you add that together, I ended up making $40,000 on a $250,000 rough-ish investment. I think that's pretty good. The stock is still down, I don't know, 20% or more than that. Yeah, probably like 25% from its high or 30% from its high, and I made a profit. So this is the power of covered calls, folks. And if you're saying, Mark, you're going to get called away, you're going to get assigned because it's over your strike price. Look, I've never been once assigned in 6.5 months. And most of the time I've been in the money. And most of the time the stock's been over my strike price. So get that out of your brain. Like that's old programming, right? If you're asking me that question, you need to go back and watch this whole 50 video series, which is going to take you a few hours. But you're going to understand that being in the money doesn't mean you get assigned, number one. Number two, so what if you get assigned? So what? You get assigned. Like that's the max profit you could have made on the trade. Yes, you could have gone, well, shoot, if I'd never sold calls against it, I would have made a bunch more money. But that's not where we're in this, right? You're either in this for collecting the income or you're in this to make capital gains. If you're in it to make capital gains, you might as well just buy calls and be a risk taker and instead of selling calls. That's what we do. We take advantage of the risk taker. They pay us for the right to buy our stock. So that's what we're in this for. So if you're like, oh, the stock is going up, you're leaving all this money on the table, you're capping your upside. Yeah, but that's not what this trade is about, right? It's like buying a dividend stock and it pays you 8% a year, right? And then you go, well, the dividend stock went way up and you missed out on all that. Yeah, but you didn't buy it for that. You bought it for the dividend. Kind of the same thing, right? It's like another analogy, right? You've heard this before if you watch me, but it's like you go out and you say, I want to rent a house out, right? I want to buy a house and I want to rent it out to a tenant. You pay $300,000 for the house and the tenant pays you $3,000 a month. Do you really care that the house goes from $300,000 to $310,000? And then maybe 2 weeks later, it goes back down to $290,000 when you're looking on Zillow or whatever you're using to price the house. Do you care? Or do you care about the $3,000? If you care about the value of the house, then you won't have a tenant. You'll just fix it up and flip it. You'll be like one of those house hunter people, right? But if you care about the income, which is why you bought the house in the first place, then you just make the tenant happy and you keep the tenant paying the rent. And as long as the tenant pays the rent, you're happy. The stock is going up and down over here. You can't do anything about that. Maybe it goes up, maybe it doesn't, but you're getting the $3,000. You see what I'm saying? So the risk of assignment is a silly risk that you got to get out of your brain, and so it gets assigned, so what? Like really ask your question, so what? That's great. I can always buy it back, right? Number two, I like to roll. You've seen a 6.5 month trade here. Most of these are, well, all of them are rolls, right? I've rolled up and rolled down at the money and out of the money and under the money. And that's the game, right? Because the rolling keeps you in the position. If it gets assigned on Friday night, Saturday morning, and then you buy back, well, it's kind of the same math, but you have to make a decision every Monday morning to get back in and where do you sell and all that stuff. So I roll my positions, okay? So I'm not going to make a big deal about this final video on MicroStrategy because I'm going to go back in on MicroStrategy as soon as I move all my money out of Schwab. And I've got a lot of accounts, so they really kind of screwed up. But anyway, that's their issue. You can see a $40,000 profit is not awesome, but it ain't bad on $250,000. Like, what is that, 1/6? What is that, almost 20% in 6.5 months? That's kind of what we talk about doing. We try to make 1% to 2% a week. But we hope the stock doesn't go down. That's where the risk is, guys. If you think the risk is that the stock is going to go up and it's going to get taken away from you, you shouldn't be doing covered calls. You should be just buying options or buying the stock and going and playing golf. But if you're in this like me for the cash flow, this is about cash flowing the stock from the juice, from the extrinsic value. If you don't know what the extrinsic value is, go find out, right? Because in a stock price, there's the intrinsic value, that's the in the money amount, and then there's everything else in the premium, right? The out of the money amount, the juice, whatever. And we always get the juice. Like 100% of the time, we get to keep the juice. And yes, you buy it back for a few pennies to roll it because it's about to expire, but we always get to keep the juice. And you see the results here, right? And a lot of people along the way have been trolling and saying, oh, Mark, you're missing out on all the upside. What if MicroStrategy rips up? That's the one everybody says, rips up. Well, what if it does? Awesome. Like, I capped my gain, but I got the juice. And MicroStrategy pays a huge amount of juice. That's why there's all these firms that are creating ETFs around it. MSTY and MSTX and MSTW and all these other ones that are coming because it pays so much juice. They're in it for the juice too. They're creating income. You can create your own MicroStrategy ETF and you don't have to pay anybody any fees. And yes, you could just go out and buy Misty. Sure, awesome. Or you can learn how to do this yourself and keep the fees. So at the end of the day, I'm pretty proud of this. I stuck to it even though it was tough, even though the stock was going down and the risk is to the downside. And how do you prevent the risk to the downside? You sell deeper in the money. And when you sell deeper in the money, you protect yourself. And if you don't understand that, do some math. Realize that you make money on the in the money amount when the stock goes down, and that offset your base going down. So that's a cushion that allows you to not lose money when the stock is going down. That's why I love in the money trading. That's why I teach it. Like, I go an inch wide and a mile deep on covered calls because I think nobody is out there teaching covered calls such that you understand the nuances of in the money, out of the money, at the money. Because there are differences and you've got to have a trading plan to handle what happens when the stock goes up, what happens when the stock goes down, what happens if it goes sideways, what if you get a sign, which I never have, by the way, in 6.5 months, and I don't know how many gazillion trades. There's a lot of trades here, probably 60-something trades, I would say, and never got a sign. So if that's your big worry, forget about it, and even if it is, who cares? All right. Enough on that. I'm going to get back into MicroStrategy, and I'll probably add it to this spreadsheet because in my mind, I'm still in it. And unfortunately, I had to just close my account and move the money somewhere else, and that's the way it goes. Sometimes things don't always work out the way you think your plan is going to work out. But in this case, it's not a bad result. All right, thanks for watching this MicroStrategy video. I hope you learned a lot. This series, actually. I hope you learned a lot. That was my goal, is to teach you that there's a strategy. There's a way to make money in the market from cash flow, from the juice, from the extrinsic value, from the gambler who's willing to pay you that extrinsic value every week. That's what we're in this for. And there's a lot of money in MicroStrategy and Tesla and Palantir and some of these other big ones right now. So thank you so much for watching this. I hope you learned a lot. That was my goal. And if not, go back, watch a few more videos, watch some other videos. I got some master courses for free on my site. We got all kinds of stuff. But anyway, I hope you've learned a lot. That's been my goal. And I want to be here to educate and certainly love your comments. And if you haven't subscribed, please do that and all that other stuff that I say every week. But anyway, thanks for tuning in, and I'll see you on the next video. Bye. Let me ask you something. Are you tired of losing money in the stock market? Are you tired of watching your portfolio go nowhere while the markets swing up and down? Or maybe you handed your hard-earned money to a financial advisor, hoping they'd help you grow it, only to be disappointed by high fees and underwhelming returns? I get it. I've seen it all. And that's exactly why I created the Cashflow Machine Elite course, to put the power back in your hands. This isn't just a theory. This is real, in-depth training on how to generate consistent weekly income from your existing portfolio using covered calls, just like the ones you see in my videos, but at a whole other level. Every week, you could be generating hundreds or even thousands of dollars in premium income, enough to easily pay for this course in a matter of weeks, and more importantly, enough to build a life where your money works for you and not the other way around. Let's be clear, this course isn't for everyone. It's not for people looking to get lucky. But if you got a decent sized portfolio and you're ready to stop hoping and start earning, then you owe it to yourself to invest in the knowledge that can change everything. The Elite course is now open. The results speak for themselves. Click on the link below and let's build your cash flow machine together. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.